Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you here today. We're going to have perhaps a live market this afternoon. We got Nvidia's earnings. We will take a look at that and also see kind of where that spreads. As we go to other stocks as well, like SMCI that we talked about yesterday. We'll talk about that. We'd like to welcome Mike, Josh, Gary, Eric, Mike, Eva, and many others. Welcome to you. Now, just real quick as we go, just remember that we have a conversation in this class. It's not a lecture, okay? So we try to get together as an investing group and kind of talk about some of the opportunities we're seeing out there in terms of trading growth and value stocks. Now, we'll talk about growth and value here today. We're also going to talk about some bullish and bearish examples of maybe where some stocks are kind of showing signs of growth and or value or the lack thereof. Now, remember when we talk about examples, and the information we provide here is for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. There's other research like fundamental analysis, macro analysis. That's important to kind of get a grip on what that is too and how that affects the technicals, okay? Also remember that the paper money software application known as the desktop, we will use that. Investing involves risk, including loss of principal. Now, as we get started here today, we'll take a look at just briefly where the indexes are by the numbers and sectors, and then we're going to talk about the Nvidia earnings, where they stand, okay, and how that's kind of affecting the market. We will also take a look at Target, Walmart, Costco, kind of show some of the differences we're seeing in the retail space and who's pumping out the numbers, and also what it might mean for maybe other areas like Dollar General, Dollar Tree. I mean, are some of those stocks out of the woods, or could they get hurt as well like Target did? Is that telling us something? Then we'll talk about that. Now, first off, just real quick, is I have the index list here. Okay, now this is a personal list I made. Okay, and these are the custom scripts we have. If you went to my page on X, you'll see the scripts there as well. So first off, we always like to look at the trend. Okay, that's where the stock is in relationship to the moving averages, and there's a lot of 4, okay, 5, 4. 5. And so this kind of tells you that momentum where we were just going up, 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 which was very nice, it's kind of reached a climax point and the price is chopping around. Now, if we're going 5, it just means the price is falling down below the shorter term moving average, the 10-day exponential. And if we're in point blank number one there, we are below both moving averages. So if you're a shorter term bear, there's been some examples of being bearish, okay? Now you got to remember when you look at the weekly charts, the trend W for weekly, there's still a lot of charts that are 3s and 2s and 1s on the weekly chart. But when we look at the daily, there has been maybe some softness for sure. We don't also like to see the VIX in trend number 2, which means the volatility has gathered momentum to the upside, which typically means stocks have a headwind, okay? So that's what we see right there on the index. Now, when we pull up what this chart looks like, the SPX, this is what the SPX looks like, okay? And you're going to see that we had a long lower shadow here today. We went down to about 58.60 or so, and we closed up near the top. Now, if we bounce to the upside here, I think bears are going to lose their minds, okay? That's the way it seems. I'm seeing a lot of bearish content out there where people are kind of speculating that the market could drop. Makes you wonder what type of positions they have, okay? Now, remember, you got to remember something. If someone does a bearish trade or 2 or 3, that does not mean that their portfolio is bearish. They're picking stocks that they think can go up and buying them. And they're also going the opposite, bearish on some that they don't think are going to do very well. We're going to show that here today. Now, when we take a look at the NASDAQ briefly, you're going to see the same thing. Not a whole lot of difference in chart. Long lower shadow, ramming it all the way to the top on the NASDAQ. Okay, speaking of that, let's go to the Nvidia for just a sec. Now, we will also, if we want to kind of see post-market hours, we could change this to a 5-day, 15-minute. We haven't really seen anything yet, maybe a little bit, 30 cents. Don't think that's come out yet. And so we will keep an eye on that. Now, briefly, when we also go back to, let's say, this right there, sectors, there's been a consistent theme, okay? When we talked about energy, energy was up about another % here today. We're going to talk about one of the stocks in that area here today. It's been, when you look at the relative strength, it's been the strongest over the multiple periods of time, still. When you look at real estate, okay, that really has done well over the last 2 weeks. RS5, relative strength for 5 days, 1 week. Relative strength 10, 2 weeks, okay? And you're going to see that it's utilities that's having a little reversal, and it's real estate, okay? So if you like to look for, let's say, names that are income generation, utilities and real estate showing a little bit of a move. We pointed out yesterday, when you look at, let's say, financials, we did see financials drop yesterday. We talked about exiting those yesterday, and you're going to see that those have dropped over the last week after being quite strong over the last little bit. Now, that's all I really want to say in terms of the sectors. So energy still leading, utilities and real estate kind of getting a little move back to the upside. Keep an eye on those. Now, let's just kind of go back to, do we see anything yet? Now, what I'm going to do, by the way, if you want to kind of see this, we're going to hit on the left-hand side, click on Switch Gadget, okay? And what we're going to do is we're going to just say, let's go to, let's say, let me just go to, just real quick, what's the best way I want to do that? Let's go to, let's go to, no, use the news. Just think of the best way. What I'm going to do is detach this. Let me see dashboard. Yeah, let's go there, okay? So what I'm going to do is I'm just going to detach this. So when this comes out, we kind of really want to see what's going on with that. Let me detach that, detach it, and I'm just going to slide this over here to my right-hand side. So if it pops, we'll keep an eye on it. Now, the reason why this matters is, you know, Nvidia's in the Dow. So where Nvidia goes, it could cause the Dow to go up, down, whatever, or even sideways, further sideways. Okay, so major takeaway from the S&P and the NASDAQ. Shorter term negative, right? Been falling. That moving average, when we talk about the 10-day whole moving average, still giving us the red line. Okay, so far it's been telling the truth. That line is red. There's more sellers than buyers. Now, you start seeing at the bottom of this bullish type candles, like hammers, like piercing lines, like bullish engulfing, and so on. You can then start to get that line to change. Those tend to happen near the area support, which we're sitting at, but there's no confirmation right now on the 10-day moving average. Now, what I want to do is I want to kind of talk about some stocks from a perspective of bullish examples. And one of them that I want to bring up just briefly is I want to bring up BKR, okay? Now, if you look at BKR, you're going to notice that now, by the way, what is this in? Well, Baker Hughes, if I pull this up, okay? And what I'm going to do is we're going to be on both the Thinkorswim platform, okay? And we'll also be on the Schwab.com. We'll look at both to show some differences. What I'm going to do is I'm going to go to Analyze, that tab, go right to Fundamentals. And I'm going to click on this. Now, what you're going to now notice is, okay, provides a portfolio of technologies and service to energy and industrial value chain worldwide. Now, you go back up and just pull up the sector briefly. IXC, that's what the sector looks like. So something is pushing this group up. Now, when we pull up BKR, which has been on the list we've actually had for a little bit, and we zoom in on this, we ran up a lot, and then we kind of pulled back. Now, that pullback was right around to about 42.60 or so, and then right now we're seeing a pretty big or pretty large candle. Now, if we get a large candle at the end of this, okay, get a large candle at the end of this, notice we get the short-term moving average to go from red to green. Now, do not feel like you have to sit there and look at each stock individually. So what I'm going to do is we're going to make a quick list of stocks that we're going to be watching, okay? And I'm just going to call this a fundy list for fundamental list. And we're going to put up this one, BKR, first. Now, if you don't mind, I'd like to kind of do a number of examples. So when we pull up, let's say BKR, and we look at this, you're going to see that it's, what I'm really trying to show you is if you look at the 10HC, that's the 10 hull counter. So that just turned up today. That's just kind of interesting. It's in the sector that's been the strongest. It's also showing a potential bull flag as well. And the trend is still 3. So if we're trying to time an entry, that's maybe when the investor's trying to time it. Now, if we go back to the chart, what we're going to do is we're going to right click on this, drop down to buy custom. We're going to put it with OCO bracket. Now, let's go back and just real quick check on something. Now, this CFRA, Market Edge, Argus, Morningstar, this is not Charles Schwab, okay? These are separate analyst firms that give their opinion, okay, on what they think the company, where this current stance is, the history, and forward-looking statements that are not actual. So you could actually look at those there, but that's not Charles Schwab. Now, if you go down and take a look at this, the one thing about, let's say, energy is it's volatile. And what you're now going to notice is when you go down and look at something like, say, the PE ratio down the bottom left-hand side, the 5-year PE ratio of this company is 26. The current PE ratio of this stock is 16. Now, why is it trading so low? Well, you don't typically get high multiples when the revenue can have quite a bit of volatility with it, okay? So that's not unusual. Now, when we also go back, what's the dividend yield? 2.29, okay? When we look at the earnings per share, okay, question that was asked this morning, what's the difference between revenue and earnings? Revenue is what you bring in. Earnings is what you made, okay? Now, if you look at the earnings, and I'll drop this, it's defaulted to annual. When we look at these numbers, you're going to see it's $1.91, but we want to kind of look and see the quarterly where they are, and you're going to see that overall, they actually, in the last quarter, they've actually done quite strong. Now, if we also go back to the annual dividends per share, as they've actually gone up, check. When we actually look at cash flow per share, not the strongest, but still 261. And that if we take a look at also the profitability, 13 double digit, not bad. And if we look at that net profit margin sitting here about 7% or so. Okay, so not the biggest, it's not like technology, but it's not that weak either, okay? Now, what I want to do is just for a second, I want to go back to just real quick the Charles Schwab website for just a moment. And this is where we want to kind of look and see the differences between maybe companies that are in the industry group, but also maybe ones that you want to compare it to. So first off, what I'm going to do is I want to just bring up BKR, okay? I logged in, typed in BKR at the top right, and then once I do that, click on Baker Hughes. What I really want to find out is two things. I want to kind of see a forward-looking estimate going forward. What are their expected earnings? Now, this is going to be very important because when we talk about Walgreens, Target, a couple of these companies, we want to kind of see what are their expected earnings. Are they expected to grow? Okay. Quarter over quarter, year over year, what is it? And I want to kind of see the history of what did they estimate and then what was the actual. Okay. Now, if we take a look at this, what you're going to see is this is a company where the actual is better, has been better than the estimate. Actual better than the estimate. Some people like to see that, where they don't just guide and hit what they were estimating, but sometimes they beat it by a couple cents, okay? Now, if we scroll down, you're now going to see it gives us a comparison to these companies. Now, notice these tabs up at the very top, okay? But we're going to just go to where it says Show More. And if we go down, what I want to kind of see is it's going to show us BKR compared to HAL, compared to SLB, compared to TS, compared to NOV. This is where it's been over the last 6 months. So this is where we can kind of see the price performance compared to its peers that were given. Now, if we look at kind of this, it's not that the net profit margin of BKR is the best. Okay, you'll see that others are better. But when we actually look at, let's say, the return on assets, there are others that are better. But when we actually look at, let's say, PE, you're going to see that when we look at BKR, it's a little higher than some of these others. Now, the reason why I'm showing you this is it's okay that if you look at one, just like you would in real estate, if you find a house you like in a certain neighborhood, feel free to go look at the neighbor's house across the street that might be for sale too, okay? Now, for time's sake, okay, we're going to do the BKR example. And if we take a look at that, BKR, okay, and let's go back to that. Now, this class is called Trading Growth and Value, okay? Now, remember what we said. The foundation of our trade examples is based upon the price being above the 10-period moving average. Now, to say something and do something is totally different. Why are we taking this trade? Well, it's in a strong sector. It's one of the stronger stocks in the sector. And if we looked at, for example, what you're going to notice is it's the first day it's gone green. Now, what we're going to do is, what's the current price? 44.32. I need help with the target and the stop. Now, the stop I feel pretty good at, or with. 42, okay, 42.77. We're going less 3%. Now, if we take less 3%, it's going to be 41.48. So 41.48. So anything less than $50, we do 3%, not 2%. Try to give a little bit more. Now, when we look at a longer term target, we might not see that longer term target. If we go back and really look at this, I don't see anything. What we do see is that for the long term, we kind of had a long-term resistance right there, and we had a drawdown, to say the least. I like to use that and kind of draw that down to this point, body to body. So if we're kind of looking at like that 161 extension area, we're going to put it right at about 49.50. So I drew it from where we had multiple touches of resistance. I drew it down to where do we have the lowest candle? Where did that move start? Where did it go up to? The 100% represents resistance, and that 0 represents the kind of the body of that candle on that day. We're going to put a target at 49.50, dated GTC. Okay, for time's sake, I'm not going to change the 100 right now. We're trying to focus on the energy, picking a stock in that space, and then we have a stop on it as well. Confirm send. Note that it says with the stop, there's no guarantee that it will actually fill at that price in terms of the stop, okay, or near the activation price. So we just have to understand that it could get filled at a lower price level, okay? Send the order. If that's okay, it's going to put it right there. Now, are there any questions? Yep, that's right. James Body to Body Boyd. Never forget it. And I tell you honestly, when I played football, I feel bad for half the people I hit. If I saw them, I'd say I'm sorry. I don't know why. I just liked playing football and hitting. My helmet, that was back before there was, you had concussions. Back then, you actually just said you had a headache. But I don't know. I thoroughly enjoyed just hitting in football. And James Body to Body Boyd is what they called me back then as well, in Kentucky and New York. Yep. Okay. Now, what I want to do is I want to go back to something for just a second. Now, I still don't see Nvidia came out. I'm watching it. Okay. We're still at 146. Now, if it's come out, it hasn't done anything to the price. So it's kind of doubtful. So let me know if those earnings come out, but I am watching that. Now, I want to also go back to one. I want to kind of just show a couple Dow stocks that have also come across the radar that we're going to keep an eye on. Okay. So example given is number one. When you look at, let's say, we might have to show this. I was kind of saying we might kind of just look at it, but now upon looking at it further, it kind of maybe there's some potential interest. Now, if we take a look at this, we kind of see that we have a double bottom so far. Okay. Now, a lot of times value investors, they like a little pullback. They like something that might be on sale. Okay. Now, what you're going to notice is it dropped in the price. This right here represents the lower high. Now, do you think other investors saw where the lower high was? Pretty good chance. Now, here's what's kind of awkward. If we take a look at this, if investors knew where the 215 was and they were so freaking scared about the 215, then why did they ram it into the close? Now, this morning, apparently, retail investors don't have any magnitude of money to move prices, which I disagree with, okay? I think you'd be more surprised than you think. I think retail investors can, okay? And if we kind of flip this and said, well, no, institutional investors control everything. The retail investors are just a caboose on the back of the train. Well, here's the thing. Then why didn't institutional investors ram it up to 215 if they were so scared of the 215 level? Now, you typically wouldn't take it to the 215 and ram it to the top of the candle or the top of the intraday high unless you thought it couldn't go higher. Now, when we actually go back to this for just a second, Nvidia is out down about 4 or so, 5. Now, remember, we got to kind of give this a little time to kind of see the reaction. Now, a lot of times what you'll see is the initial reaction is down, and a lot of times it can come back up. Remember that? Sometimes when it has the initial reaction of going up, sometimes it can go down. So sometimes you almost want the initial reaction to be down, okay? Remember I said that. Just we're going to keep an eye on that. Move that back over. Now, if we go back to analyze for just a second, okay? When we look at the earnings per share on this, okay, pretty strong on the earnings per share, 8.15, the highest it's really been over the 5-year period. ROE is 33. Net profit margin healthier at 12. And when you look at, let's say, the price to earnings, again, this is another stock that's trading below the 5-year average, okay? When we also take a look at, let's say, the 3-year average of growth rates, it's been better. Now, I want to kind of bring this back up. What we're going to do on this, and we'll do this one quickly, okay, because I have some other stocks I want to get to. If we look at this, we're going to try to play this little bounce back to the upside. Now, what we're going to show is we're only going to buy half the position. So if we can normally buy 100 shares of stock, we're just going to do 50. Why half? Well, because what we want to do is either A, add half if it were to take out the lower high, or add half if we were to get a little pullback to the midsection of today's candle. Now, notice there's some resistance areas. There's a level there, and there's also a level here, okay? And when we go back and take a look at these levels, and I'll minimize the bottom, okay? Just saying, okay? Nvidia down 3-ish, okay? Remember, you drop down whatever, and we see this all the time with the Fed as well. Whatever the initial reaction is, it's typically wrong, okay? Be very careful trading that first 1 or 2 bars, okay? Be very careful, okay? Now, if we take a look at this, we're going to kind of put a target right in the middle of that range. So that's going to give us about a 225-ish target. You might set that a little higher if you would consider that. Now, what I'm going to do is I'm going to set a stop underneath, and it's almost par now, almost down $1.80. Okay, not much. Buck, about $1 now. Okay, so maybe I'm just saying, okay. I mean, after 25 years, you think I might learn something. Now, here we go. So now by the way, the trade we did yesterday, if this, and it's flat now. Okay, I've already said what I've said. The trade from yesterday was not for direction per se. It was about the volatility popping. And really, if we kind of just sit right here, this will be beautiful. I mean, we'll just have to see what happens tomorrow, okay? Now, I looked and saw what that volatility was at the close. I remember where it was. It was about 151. Would like to see where that is, and it was about 87 for next Friday. So we're going to keep an eye on that tomorrow morning. Yes, I will teach the trend trading class, even if I have half a voice left. So what I got a target there, 225, and I got to stop there at 213. No, we're going to set the stop underneath that level, about 210. Okay, 209.98, less 2%. And what you're now going to see is 205.78. Okay, so we're going to put it right there. Now what we're going to see in this case is, now remember, why are we not taking a full position? Well, we're trying to, leave some capital of ammunition if it were to break out to add, or B, if tomorrow, if it's down a little bit, okay, and it goes down to the midsection of today's candle, trying to buy in a little dip. Just because you go down $1 or $2 doesn't mean it's bearish, okay? We're going to go confirm and send. And now what we're going to do is read that stop order line again, send. Now, I don't know about how many of you have really good intentions and then you forget, okay? I have 4 kids and a dog. I know I have good intentions too, but sometimes life gets hectic. So what we're going to do is going to use an alert. We're going to right click on that right at the middle of the green candle. Go down to create alert. And what we're going to say, look, if you get at or below, okay, let me know about that. Now, if we set an alert right at the middle of that candle, create alert, we want to do it at or below, okay, create, it's going to put an alert right there. So if tomorrow I get that, hey, IBM trading at or below 212.68, 63, it's reminding me this might be kind of that mid-candle retest, okay? So, hey, we're going to try to add on that dip. Now, I want to also go back to just real quick the other stock. So the one stock that we also want to kind of keep an eye on is SMCI, okay? Now, SMCI we talked about yesterday, which has kind of been trying to come back up. That stock down 250 today, sitting here at the post-market hours, not much reaction from SMCI. The key word is yet. Now, let's kind of talk about just briefly what on earth happened with Target here today, okay? Now, what I want to do is I want to go back to just real quick. So when we talk about the trades that we've done, let's go back to this and let's kind of look at our working order. So what trades did we put in? Number one, BKR, the stock position. Second trade we did was IBM, trying to add the other half position on a breakout and or a retest of today's range. Those are the 2 trades we've done so far. Now, what I want to do is I want to kind of show this, and I want to bring up this, and I want to kind of pull up a different stock. And the stock that I want to pull up is TGT, okay? And I want to bring up, let's say, Walmart, and I want to bring up, let's say, Costco, and I'm going to bring up DLTR, and I'm going to bring up $DG. Now, I'm going to see if that can load, and it does, okay? So I want to kind of talk about some of the differences we're seeing in retail. Now, you got to ask yourself the question, is everything that bleak out there? Everything? Okay? Or is it just some stores are losing customers and other stores are just doing a better job? Okay? Now, the other day, I went into the Target for the first time in 3 years. It had to be at least 3 years. I ain't never going back. Okay? The only time I go to Walmart is when I do the pickup order. Okay? Walmart to me is like going to a zoo. Yeah. And it's just, you see the sea of humanity. And sometimes it's not at the greatest point, right? So anyway, yeah, you got to love it. Now, so here's the deal. Target, Walmart, I want to see the differences. So when we look at Walmart, you're going to see that it's not even over the last, let's change this, 3 months, okay? Or you do the 1 month, we're not even close, okay? Even if I went the last 1 month, it's really a 2-horse pony race, okay? You remember, this is over the last 1 month, okay? So it's really Walmart and Costco. Now, you got to ask yourself the question, did people stop buying stuff? Or do people stop buying stuff from Target? Now, did people just say, I'm not spending money? Or are they spending money at Walmart and Costco? And are their sales and profitability or earnings reflecting that? Now, here's the deal. What happens if they actually continue to erode? Okay. Well, when we actually scroll down a little bit, the net profit margin you're going to see on Target, it's higher, and that might kind of be the cause. If they're trying to actually price things too high, people might tend to buy less. Walmart, 2.46 on the net profit margin, very thin. Costco, 2.9. Dollar Tree, not a great sign, okay? And you're going to see that DG 3.57. So the highest profit margins we have is Dollar General and Target. Now, when we scroll down and look at the earnings per share, 9.69, but you got to remember it's also reflective of how many shares do they have, okay? The PE is at 16. Why is it so low? And you look at these are trading at a high multiple. Why are they trading at a high multiple? Well, they think there's a greater chance that they could grow into those forecasted earnings. And when you look at DG at 11, so I do not share the viewpoint that a lower PE is necessarily better. Because if you get a low PE, there might be something wrong with the company where people aren't willing to buy it based on trailing earnings. So you want it low, but not too low. If you get a PE lower than 15, okay, it's starting to get a little concerning, okay? Now, if we scroll down, and if we take a look at this, we can also see what is that sales growth over the last year, what's the forecasted amount, and so on. Now, what you're going to notice is if we take a look at this, okay, I want to go back to, let's say, Costco for just a moment, okay? Now, if we look at Costco's longer-term diagonal line, now, usually when we have these pullbacks, and the pullback, and the pullback, and the pullback, and the pullback. Now, a lot of times, as you can see, if we zoom in on the right-hand side, and how many of you besides me have ever said to yourself, when this pulls back, I'm finally going to get in? Okay? How many of you said that? I'm finally going to get in now. Did you get in? No, I was just kind of saying, next time. Okay? Next time you're going to find, it's unbelievable. Okay? Now, here's the deal. Is this stock showing any signs of buyers starting to buy off a support level? Now, here's the deal. The shorter term moving average, it's still red. Fine. But what could start to change that color? Well, number one is the size of the green candle. We got a green candle like BKR, it could change that short-term moving average line. If we get maybe like a hammer candle where we have lower shadows, large, and bodies smaller, it could also turn that moving average color green as well. Now, what you're going to notice is if we start getting green, and we go up again, we close above the high of the low day, this starts to bounce off support. Now, don't worry about, can't buy that many shares. We did this on Nvidia as well. Not Nvidia, but it was Netflix. By the way, that trade from yesterday, it was crazy. I don't know if you followed that, but that was crazy. I'll talk about that tomorrow. But what we're going to do is we're going to right-click on this chart, buy custom. Now, a lot of times when you have earnings of a company like Target, we need to be thinking about what does that mean in terms of its competitors. Are their competitors just better? So in a space of, let's say, 5 companies, hypothetically, Target, Walmart, Costco, Dollar General, Dollar Tree, whatever, they don't all equally win. And some 1, 2, or 3 tend to be better anyway. And the other 2 typically fight for their lives to stay alive. Okay? And a lot of times they don't. Okay? Buy custom, we're going to go with stop. Now, if you want to put a target on that, fine. But what I'm going to do on this is I'm going to set a stop underneath 914, okay? 26, less, 2%, 895.97. 895.97 day to GTC. Now, if the amount of capital that we could do, hypothetically, was 15,000, we're going to put 15,000 right there, which is going to give here about 16 shares of stock. Now, when we go back to something, and I'm going to kind of show you some contrast, okay? When we look at, let's say, analyze, and we go to fundamentals, we need to really think like an investor, okay? I want you to imagine that you're putting your hard-earned money out on the table. It's on the table. And you're trying to find companies that have cash flow. We're not just buying a ticker. We're not buying the name of the business. We're not buying a product. We're buying something, a business that has hopefully products, plural, and services, plural. And they also have a presence currently, and they have dominance in their space. How do we know if they had dominance? Well, we probably see those revenues over time continuing to grow. Earnings might continue to grow and be higher than the industry and or the sector. When we look at the earnings per share, it kind of looks like a stair stepper, okay, where we kind of just see 19, 20. Now, some of you are saying it's my spouse. Some of you thought I was going to walk into the trap and say, I know it's going higher because it was my wife. You think I'd fall into that after 25 years? No way. It's the husband, okay? I've been trained better than that. Ladies, you knew I wasn't going to fall into that trap. Nice try. Now, what you're going to notice is pretty high. Now, if we want to kind of see quarterly, and you have to understand here, some of these businesses, they're cyclical, right? We're talking about retail, Christmas time, Thanksgiving, things like that. We've actually had in Q3 one of the higher numbers we've seen. Now, if we take a look at the dividends per share, dividends, okay, you're going to see that also free cash flow, 15.20. What are they doing with that money? What are they doing? Okay. And if we look at the ROE, 27 on a stock that's almost at $1,000. Now, when we look at the net profit margin, they're not Apple. Okay. They are not having net profit margins of 10 times this number. They're trying to sell a lot of stuff, and you know that because they give you a flatbed cart. Okay, who gives you a flatbed cart? I mean, who does that? Now, and if you also go down and really take a look at this, we are also going to see that this is still fetching a premium. We are literally currently at a PE of 53. The average is 42. Why is this fetching a premium? Well, because maybe people are trying to chase the trend, chase momentum. That does not mean that it can't continue to grow. Okay. Now, what I want to do is I want to go back to this. Let's go back to the chart. 16 shares of stock, confirm send. And remember, with stop orders, there's no guarantee the execution price, when it fills at, will be equal to or near the activation price. Now, what I'm going to do on this, and I'll fix that, we're going to go long. Trade number 3 here is going long Costco. Okay. And now, if we did set a trade, like a target on this, some might, for example, set it at, let's say, 961. We're a little concerned about setting a target on that, because I think we have to go back a little bit further and kind of maybe look at, is this in an upward channel? And if we look at this maybe upward channel, where might it be, if we're really saying where might be a target if it went straight up? And we're not saying it's going to. But I think if we kind of keep in mind the prior highs, extended, I think we'd probably be talking about a target right about 988-ish in that ballpark if we're setting a target. Now, you got to remember, its twin cousin, Walmart, has been a horse as well, okay? And here's the deal. Now, some people will say things like that aren't very well thought through. They're not very well thought through, okay? And what do I mean by that? Well, I don't like these stocks because they're just slow. Well, here's the deal. I mean, sometimes they're slower in terms of making the ascension to the upside, but a lot of times the pro is they're kind of more consistent. The same person that says that's too slow says that the stocks they own are just too volatile. Okay? So sometimes lesser volatility is not negative as long as the trend is still going up to the upside. Okay? Now, don't forget that. Now, I want to go back to just real quick. Let's take a look at Nvidia real quick. Nvidia so far, kind of like a non-reaction. We'll be watching this tomorrow, teaching the trend trading class at 1 p.m. Eastern. We'll look and kind of see where this is in the tomorrow and how that position played out we did from the other day. SMCI, we did the example there too. Kind of a non-reaction. I want to see how this plays out. The trade we did was not necessarily direction. It was volatility. Now, what I want to do is I want to go back and I want to speak to Eva's example. No, I want to go back to just real quick on a stock. Now, some of you might not know this, but when I am not teaching, I am on X. Okay, now some people, they'll say, hey, I'm on X. I want to kind of show you like some of the things I put out there. So I follow quite a few people that I've known for many years. Anything that I see that is interesting, I share it back. I repost it, okay? Now, you're going to also notice that if some of you said, James, I don't really know what's in AI or who are the companies involved, I shared that today, okay? Also, for example, kind of talked about if you don't have any fundamentals, it's hard to have some technicals, okay? If you don't have any fundamentals over the longer term, companies like Spirit Airlines, you eventually don't get a chart, okay? Or one that's a lot closer to zero. Now, the other thing I want to kind of show is when we also take, so if you have not followed me on X, make sure that you do. By the way, you can also follow Ben Watson as well, which is he is active on X as well. The things we talk about are educational nature and not recommendations. Now, the one thing I want to kind of show just real quick is I want to bring up a stock, ALB, okay? Now, why are we talking about this? Well, ALB kind of has like an old support area, okay? Now, the one thing is, if we did our due diligence today and we went to the market watch, you're going to notice that one of the sectors that did go green today, or this week, I should say, is going to be basic materials. Now, that kind of was, actually, excuse me. Yeah, there it is. Right there. Okay? Put it in a different color so we can see it. Let's go yellow. So now what we're going to see is basic materials in the last 5 days went green. Now, the example that I'm going to talk about just briefly is ALB. Now, ALB is in the chemical space. So if I pull up ALB, you're going to see that this is what it looks like. And why might this be of interest as a fundamentalist and a technician? So if you said, James, I don't have a clue what they do, we're going to go to analyze fundamentals. Now, you got to understand something. When you look at companies like this, they develop, manufacture specialty chemicals worldwide, energy storage, specialties. Now, I want to kind of show you something that might surprise you. If you look at the US markets and then you compare them to Asia and Europe, it hasn't been close, okay? So the one thing we want to kind of definitely be watching is where's kind of the bulk of their business. Europe markets made fresh lows here today, okay? So we would like kind of a business that maybe has a bulk of their sales in the US, okay? Now, what you're going to notice is if we're talking about something that's base materials, you're going to notice that the earnings per share or revenue is probably not going to be as Costco-ish. Probably just not going to be. It's more cyclical. It's based upon, actual like demand, GDP, businesses, consumers, the whole nine yards. And you're going to see that reflected in the numbers, okay? Now, if we went back to this, why is this of potential interest? Now, if we're talking about trading, growth, and value, what I want to do here is I want to right-click on this, buy custom with OCO bracket. Now, what you're going to notice on this is this is the second time we've punched the resistance line. Now, the way I think about resistance in my mind, if I had a wiffle ball bat and I kept hitting the piñata of resistance, just kept hitting it over and over, even with a wiffle ball bat, eventually I'm probably going to poke through to that candy eventually. Now, we're kind of thinking if price, okay, wiffle ball bat, keeps hitting resistance, piñata, all of a sudden, could that dam break to the upside? Now, maybe, could it try to go up to about 120? Could it try to go up to, let's say, 130, 134? Don't know. Now, it's not always the case where you get a channel this big. So you kind of have to taper down the optimism. You're thinking the reward risk is X. Really, reward risk is just forecasted. Okay, it doesn't mean actual. But let's say we kind of said, you know what, James, I want to take a bullish trade and I want to put a target maybe right about 121. Okay. we know someone that believes in the tooth fairy is probably going to target, okay, 134 and think this is the sweetest trade ever. But we don't believe in the tooth fairy. We think there might be a pit stop right around the midsection of that channel, which is pretty wide. Think of this like if you got a good stock move, it's about an 8-10% move on the majority basis. You don't typically get moves 20-30%. I ain't talking about some crazy trades linked to Bitcoin, okay? But if you get an 8 to 10% move, then you typically get in the process of maybe getting a little flag pullback. We're now going to go to dated GTC, and then we're going to set a stop underneath today's low. Today's low, 105.85, less 2%. And we're going to set a stop at 103, okay, 73. Now, what I'm going to do in wrapping up here is what were the trades that we did here today? What were they? Tell me what the trades were. So number one trade we actually did was BKR, okay? What was the number two trade we did? It was IBM. What was the number three trade we did here today? Costco. What was the number four trade we did here today? ALB. Now, the reason why we like to kind of be pretty active in doing trades is it doesn't matter what you know if you can't pull it off in trading, okay? It's all, we want to kind of see how does this really play out. I invite you to practice alongside us in paper money. The way you learn the best is to actually get on the ice, practice skating, okay? See if you know as much as you think. And then as you practice in paper money, you find out, do you know as much as you think you do, or do you have questions, okay? Now, I'm out of my time here, but we will send that order in as well on ALB. Now, tomorrow, you got to remember, tomorrow we'll kick back off with futures. Mike Fairborn will kick that off. I want to thank Ben Watson for answering those questions in chat. Subscribe to the Trader Talks. That way you get all of our content outside ETFs right on your mobile device or on your computer. Also, follow Ben and I on X. That way you can see all of our educational content right on your mobile device as well. Now, I'm out of my time here, but we will send that trade through. Remember, with what we discussed, it was done for example, illustrated purposes only. I want you to go out and look for some companies that might be like Costco. And if you find some, share those with Ben and I, okay? And we'll look at those more. Also, keep an eye on MO and PM. Those are more the income blend, but keep an eye on those. Those are not recommendations, but if we had a little bit more time, we could look at those as well. Tomorrow, we'll take a look at Nvidia and SMCI and see how they fared. Remember, with what we discussed, it was done for example, illustrative purposes only. I wish you a great afternoon. I'll see you back tomorrow. Thanks to all of you. Take care. Bye-bye.